What is going on, everyone? It's Scott back from Croc. I hope you guys are having a fantastic day. Today's Canada Day, and I hope everyone has been able to get outside and enjoy the nice weather that we're actually having. So let's take a look at the market here. We're seeing a little bit of gains, but not much over the past 48 hours. We're up to 256 billion, and Bitcoin sitting at 6,300. So today we're going to talk about a new coin called Distributed Credit Chain, or DCC. Now, Distributed Credit Chain, brand new token that just finished its ICO, and yeah, we're seeing it actually get quite a bit of market cap right out the gate. It came out right around 2.9 cents, and now it's up to 3.3. Sorry. So we're actually getting a little bit of a gain here, as you can see. Um, Very low trading volume, only 1.7 million. But look at this, we're seeing 873 million tokens of circulating supply out of a total of 3.3 billion. So there is still tremendous growth that this coin can have. So let's take a look at the market. It is currently trading on KuCoin, Buybox, and it looks like it's also on IDEX, although it's only on one pair. So most of its transaction volume is coming from just two exchanges. Let's take a look at their website and see what they're all about. So, Distributed Credit Chain, which is the DCC token, empower credit, enable finance. So here's its vision and mission. Distributed Credit Chain is the world's first distributed banking public blockchain with a goal to establish a decentralized ecosystem for financial service providers around the world. Very cool. So, what are some of the problems that we face right now in finance? The traditional financial industry is highly centralized. Financial transactions rely heavily on the endorsement and support of large financial institutions, with substantial transaction fees paid out to these institutions. Monopolistic financial institutions have, in fact, raised lending rates for borrowers and reduced the interest rate for lenders. So basically, as we're seeing, is these banks have so much power that they can basically band up together and make it extremely hard for people to get credit or to apply for loans, because they share people's information amongst each other, and they make it extremely hard for you to go out and actually get credit. So the core model of a credit agency is to share the costs of non-interest earning elements and bad debts by charging for good guys who can pay back the money. Efficiency. From the credit agency's perspective, a lot of the time and efforts are wasted in verifying the credit of borrowers who do not meet the agency's risk criteria, which leads to wasting resources. And then finally, profiteering. A centralized credit model entices many financial institutions to deviate from the primary purpose of ultimately serving customers, aiming for profitability. They deduct lenders while squeezing borrowers and expand their profits by extending their customer base. So these are all certain problems that financial institutions are currently facing right now, especially with the traditional banking sense. And how are these guys aiming to solve the problem? Well, they have borrowers. Individuals with specific borrowing demand establish blockchain accounts to authorize data. You've got the data service provider, which integrates individual data and stores them on the blockchain so everyone can see them. Transparency is key in the finance industry. You have algorithms that basically will judge the criteria, make sure that this is actually going to be in line with the certain bank's characteristics. You can go back in time and you can look at people's credit history, and ultimately you can assume their risk and how much of a risk are they to pay back their debt, and how much of a risk do they have to, is it going to be bad debt. So here's the advantages of going with DCC. Essentially, they want to break up the monopoly. These big banks have so much power, and these guys aim to basically break them up. And it almost sounds like these guys want to be a credit union, or they want to share some of the advantages that credit unions have, in that they will share amongst the profits in all of the people that use the system. So if you use DCC, or if you hold DCC, you will actually get sort of a return based on how much of the coins are used in circulation. Then you've got decentralized thinking. So again, blockchain, decentralized. Transform business structure as it pertains to business. Distributed banking will completely transform banking debt. And then finally, you've got government regulation. So because everything can be assessed in real time, and you can see it on the blockchain, there's not going to be as much government regulation in the years to come, because I think more governments are going to basically open up to blockchain, open up to finance, and really endorse it. So here's some of the scenarios that these guys are basically going to be encouraging. So you've got loans. That's one of the biggest ones that banks will make their money on. You've got consumption installments. Then you've got credit cards, which is pretty exciting. Then you've got mortgage claims, and you've got asset distribution. So, where are we heading with the roadmap here? So back in 2017 is ultimately when this sort of idea came to fruition. We are now in Q2/Q3 coming up of 2018. And this is when they're going to be opening up the self-creation API, establishing unified DCC MPC. I don't know what MPC stands for. And then they want to enter the Indonesia lending market. And then next year they're going to be entering Vietnam and Southeast Asia. So it seems like they're just focusing on the Asian market, which is fine. Ultimately, they want to go maybe slowly, and they want to get their name out there. And that's fine. We don't, not everyone wants to jump in and act like they want to take over the world. If their goal is just to be a blockchain company in a very specific region of the globe, by all means, that's fine. There's still going to be a use case over there, and especially in Asian markets where people might not have access to funds like, North Americans or Southern, like China countries might have access to their funds, maybe like a Vietnamese. Maybe if you are a farmer or something like that, who knows? So here's their core team led by these three individuals. He's a PhD candidate, Master of Science from 2 distinct universities. So this guy is obviously knows his stuff. Then we've got Stone Shi. He has the computer science background. And then you've got Dr. Daniel Liu, who is the brains behind the mathematics, postdoctoral research, and a PhD in mathematics. Here's some advisors. None seem to really pop out, but they all seem to have some sort of a title from a big financial institution. Moving on, we've got their strategic partners. Always good to see that other people are endorsing their company. And finally, their investors. And look at how many investors they have. They already raised quite a bit during their ICO, and they've already got these many investors to help them, both with capital purposes and maybe from advisory purposes. So overall, pretty solid team. Let's take a quick look over at their token and the use case. So in the DCC system, the individuals that require data or reports from data institutions need to pay DCC tokens. Such mode will transform the original way that data institutions generate revenue from making profits and collecting user data. So it's kind of a circle here. We start with the individual or the entity for both borrowing demand and those desiring to integrate individual data, moves on to paying DCC, so obtain certification services of data. Then they ultimately move on to the data institutions, finally to providing the reports. So they just finished their token sale. As we can see, it's built on the ERC20 Ethereum platform. And their goal, the total supply will be 10 billion. And like I said, we are only at 873 million. So this number is actually a little bit incorrect. Let's see how their token sale was allocated. Look at this. 2% was for ICO. This is crazy. 15% for market and cooperation agency and consultants, using as bonus reward for early project partners like promote. The English is pretty bad on this website. Management team used to incentivize and motivate the founding team, so 20%. You know what? This is actually not too bad. When companies allocate, I want to say 50% or more for their management team, that is when you want to stay away, because they're in it to just basically reap all the rewards, and I don't like companies that do that. And then you've got 18% from the private round and 17% what's called an eco reward. So they don't really explain a lot about what that is, but maybe they're going to be opening up some funds for some incentivized eco rewards in the future. So use plan for raised funds. Here's the distribution right here. So overall, not the best website. I know the English is a little bit broken, but ultimately it does explain what they want to do. They want to essentially make it easier for people to transact and use, more of a credit union approach than a traditional banking approach, ultimately by using the blockchain. And I think they could definitely reach some potential. There are tons of companies that have already done this, unfortunately. So I know on their website they basically said it's the world's first distributed banking public blockchain. A lot of people say that, and unfortunately it just kind of gets caught up in the marketing side of things. And when you say that you're the first, you really need to back that up. So overall, I think DCC does have some potential. Unfortunately, it's not a coin that I'm going to be investing in, but it is a coin I'm going to be following closely to see how they end up, especially over the next quarter coming up here. So with that being said, guys, thanks for watching the video. We're going to be coming out with crypto videos every single day, telling you which ones to buy and which ones to stay away from. We'll talk to you guys on the next video.